This is James with WSTrades.com. I want to provide an update here on ticker LCID or Lucid Group. So I've got the weekly time frame pulled up here, the 3-year weekly, and you can see looking at the chart, it has been pretty brutal over the long haul here for shareholders of Lucid. If they bought in early on the chart here, you can see prices up around $40, $50, $60. And it's just been kind of a slow bleed out. So if we zoom out here, you can see it had this initial crazy pump up to 65, then it dumped pretty hard down to about 17, 18, then had this rally back up to almost 60, and it's just been kind of slowly bleeding out here. And you can see these earnings reports on the chart just losing money, a lot of money quarter after quarter, which is pretty typical of these EV startups. We look at even Rivian, who's delivering tens of thousands of vehicles a year now. They're still hemorrhaging billions of dollars, just like Lucid. So they closed at 545 yesterday. They're trading down around 533 right now, so it looks like they're headed for a lower open today, unless something crazy happens in the next 45 minutes. If we come into Yahoo Finance and look at some of these statistics around the company, operating margin, negative 401%, return on assets, negative 22%, return on equity, negative 52%. Revenue is showing for the last 12 months, $753 million. EBITDA at negative $2.81 billion. Diluted EPS, so for diluted EPS, they've lost $1.63 over the last 12 months, which is kind of what we were seeing on the chart there. Total cash is at $5.25 billion, so they do have a lot of cash on hand, and that is contributing to this really, really high current ratio. So they're not going to be facing any kind of short-term liquidity issues, which is good because look at how much money they burned through. So the cash flow statement down here, the last 12 months, operating cash flow, they've lost almost $3 billion in cash the last 12 months. So good thing they've got $5 billion on hand, because if they didn't have that much, we'd see a much lower current ratio here, and they might have some trouble facing or dealing with those short-term liabilities. And you can see levered free cash flow here at negative 2.56 billion. You can see based on the most recent quarter, their book value per share is $260, so they're trading at about double their book value. If we come into the financial statements here, on the income statement, it's pretty ugly. Revenue here the last 12 months is at $753 million, but it has cost them $2.1 billion to generate that revenue. So that puts them at a negative gross profit. We see some of the other EV makers like Rivian, even though they're bleeding a ton of money, their gross profit looks a lot different than this. So if you look at 2019, they had a positive gross profit of $664,000. So that has grown into a deficit the last 12 months of $1.4 billion. So the gross profit line, super ugly. The earnings line, super ugly as well. You can see in 2019, they lost $269 million in earnings, and then the last 12 months, $2.5 billion in earnings. So pretty brutal income statement there. Let's go to the balance sheet to kind of take a look at that most recent quarter. And here's where you can kind of see that positive book value coming in. So you can see total assets for that quarter ended June 30th, $9.4 billion, only $3.4 billion in liabilities. So that's where you have that common stock equity in the positive at $5.9 billion. Let's look at the cash flow statement, and with them, bleeding billions and billions of dollars, no surprise that these financing cash flow lines are massive. And I think it was May 31st of this year, they took out like a $3 billion offering of stock. So that's why this last 12 months, this number is so massive. And if we come in on the chart, we go to the daily here, you can see it on the chart. I think it's this gap right here. Yeah, it was like May 31st. You can see this dump here from about 766 down to 650 because they did that $3 billion offering. So just kind of looking through the financial statements and stuff here, I expect them to continue to do massive offerings like we saw in May for billions of dollars, because they're just burning through way too much cash. I mean, look at their free cash flow. The last 12 months, negative 3.7 billion. So they really need to find a way to bring down cost of revenue. I mean, this is ridiculous. If they're only generating 753 million in revenue and it's costing them billions to generate that, they need to really turn this in a better direction. If you compare it to, let's just look at on the annual here, 2021, they generated 27 million in revenue. Cost of revenue was 154. And then you come in here and look, they had a big jump here in total revenue, but they had a massive jump here in cost of revenue. So you kind of want to see that revenue going up significantly, but that cost of revenue, you don't want it to rise at the same rate. I mean, eventually they need to start turning or working towards a break even here on gross profit, because right now, since 2019 up until now, I mean, this is going in the wrong direction in a big way. So I don't know how many vehicles they're going to have to produce, but at some point they need to get more efficient at producing those vehicles, because they're just spending way too much money, like billions and billions of dollars, to not even generate $1 billion in revenue. So I'll continue to keep you updated here on ticker LCID or Lucid Group. Please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.